Welcome to the Bullish Bear FX Academy. So basically in today's video I'm gonna be showing you guys how I actually got a 5% on this April pair instead of going out with a 15%. So I'm actually gonna be analyzing the market with you guys step by step so you guys could actually see, so that next time you guys can go out with a 15% rather than me that got out the 5% instead of a 15, right? So I marked off this high when I came to the market, and I was looking at this because it was a trending market going to the upside. So I didn't want to get caught up into the buys that are, because they are looking at my trading capital. It was a 10k profit account. So even if I took a buy here, and these pullbacks could actually blow my account just by this week, as you all know, if you have been trading for a while, right? And then there was no way for me to actually plot another high here or draw into a trend line because it's still the higher time frame, which is the daily time frame. Then I just had to drop it to the daily time frame. And then on the daily time frame I saw some momentum going down here, and then I drew in my horizontal ray line here. So let's pretend as if this has not actually played out. I could have actually cut the market for you guys, but I didn't. So my trading view is not paid. I could have cut price, but I have another way to cut price. So I actually drew into this horizontal line here, and then I saw this momentum coming down, and then I saw that I could get the opportunity there, but it's very risky for me to just jump into the market and start selling, because maybe the market could pull back. And then I waited for it, and I saw this in this I impulsed to the downside, and then I waited again for a correction, because you know every time we have an impulse we have a correction within, right? So when I saw this correction, I saw that okay, if there is a correction for me here, I could actually get another entry for the market to go down to at least come hit this low, because hold on, because this inflection point that the market left a footprint actually. So while waiting for this correction, I saw that okay, for my rule I have to wait for 6 to 8 candles on every time frame. So I waited to I counted 1, 2, 3, 4, 5, 6, 7, 8, somewhere about here. And I saw that okay, maybe the market could push down to this, but okay, how about if I had a high here? Then the market just wicked to the upside, and then I saw that okay, maybe here I could be getting an entry. And I had my pending order right about here, and my stop loss protected about these highs, this side, right? It's a very tight stop loss though. It wasn't that wide for me, and I was targeting these areas, but I later on got wicked out somewhere about here, and I'll explain that in a second how I got it out there. So as for my trading style, I do not use take profit, but I use I trail my stop loss. So I just trail my stop loss. So my stop loss was here. If you do not know what's trailing, you have a stop loss here. When the trade moves somewhere about here, you move the stop loss behind the candle somewhere about here, and the trade is here. So that's called trailing. Got out with a 5% actually. If you don't know how to see it, you can look here. Risk to reward ratio showing you 5%, but I'm supposed to go out the 9%. While the trades, and then when the trade started moving, when we broke out here and opened this candle, I trailed my stop loss still here, and then the market went down here, and then I trailed again, and then I trailed again my stop here, just under this candle when it closed. And then as you all can see, it's clear enough. That one I don't have to. As you all can see that this one is clear enough that I don't even have to explain it. When I trailed here, the market pulled back and just whipped me out with that. But I was looking for a re-entry, by the way, and this one was looking like this. The market was now looking down, like the trend, or the chart pattern was this and not something like this, right? So if it looks like this, then we obviously know that we're looking to go to the upside. Didn't take a trade, looked at the market and look here, we have a gap, right? We have a gap. So I think it was Monday or something when the market kept like this, and later on I saw that the market pushed to the downside, broke this low. There was news somewhere about here, so you all can see that okay, we had a buy there. So now these are just like a demonstration. So now let me go use cut. So I actually got out with a 5% while I was looking to go out with a 9%, right? So yeah, it is what it is, guys. I got out with my 5%. What are above then? I got out with a 5% on April, and then I saw again that there were new opportunities if we tagged into this, if we retested the back end of the market here, this high that we're looking at, we retested it. That showed me that we're gonna be having buys, but I'm not gonna lie, guys, I didn't catch the buys. I didn't catch these buys, by the way, because these were looking very messy than the sells, right? You all can see. Although I can benefit from them, I didn't get a trade. But let me show you how you could get a trade. So you see also that at the first here when we tested the back end, the market shot up, something that doesn't even make sense right now because I think it's a new spike or something. Market came down here, went back up, retested that again, and then you all can see that this is like a mini double top or something, and then shot up, went up, and then started trending up. So here I don't have an edge from our side. I don't have an edge of getting a trade somewhere here. Maybe if you broke up here, something like this, and then rotate something like this, and then come back in this area to go up. But it did though, it did this halfway. But yeah, that's not something that I did. So now we can move on to the next pair, which is DXY. Let me show you guys what DXY did. So this is DXY from the top. I'm not gonna be clearing my DXY analysis, by the way. So DXY, I looked for it at this value area. For DXY, I'll just be explaining. That's what I'll be doing from DXY. I'm just gonna be explaining DXY. I was looking at this value area and the market actually stopped there. So you can see that the market stopped there, came down, went again up, and then I drew in my inflection point, which became an inflection area because this is actually the 4-hour time frame. The market tapped there and then came down, and then this was my uptrend, and then the market broke out, came down. So right now I'm looking for the market to come to somewhere about this height, but as you can see that we have some inflection points within this, so the market can maybe do something else again. But I'll be doing a Sunday market breakdown that will be coming out soon. So for now, let me just show you guys what I was looking at, which is this. Let me draw it for you guys. So see this one. This is what I'm looking at, and then I'll draw in this. So you can see that the market may be left if it will maybe come to retest that. So yeah, this will be a trade for me. Maybe this will be a trade for me. Come back in, show us some corrections, and then damn it. Sorry for that, guys. And then that is a trade. This is something that I'll be taking.